Okay, good morning everybody. Mike Niemiec here with some early morning grain and oilseed comments for Tuesday, August 14th. Overnight trade, we're seeing a little bit of a bounce. We're up in the neighborhood of around 4, 5, 6 cents for the corn, wheat, and beans, up around 4.5 bucks in the meal and up around 10 points in the soybean oil. Looks like we're getting more of a technical turnaround Tuesday type reaction from yesterday's sharp losses and following the losses from the USDA report last week rather than any big overnight news as far as fundamentals go. We did find out that our crop ratings kind of stabilized, if not improved, finally for the week. I think it was in the neighborhood of around 9 consecutive weeks we were down for corn. We were unchanged in the good excellent category at 23%. Beans even saw a little bit of a small uptick of 1% in the good excellent category to 30%. But don't forget, these ratings are the lowest since 1988, and they continue to still generally reflect the type of yields that the USDA gave us on Friday's report. So we are seeing some stabilization. The weather forecast has also kind of toned down as well. We have a system that has been moving through, giving us in the neighborhood of around 3/10 to 8/10 in the eastern Midwest. We had another front coming towards the middle of the end of this week, another 3/10 to 8/10 with 85% coverage, and we also have another chance for another rain system coming next week. Temperatures are supposed to, if they're going to warm up, just go to average and then back off to average to below average. So this heat and this continual dryness that we've been seeing has been somewhat abated, not clearing up the drought, but like I say, seemingly more cooling off the speculative crowd on the upside more so than improving the crops by any great lengths. Tender activity of late's been seemingly Egypt. They were in over the weekend for some wheat. They wound up buying Russian wheat. They posted another tender last night. We'll see how the price structure goes for that, because basically they did the wheat business over the weekend, that being the Russians to the Egyptians at $316 a ton. The U.S. is more expensive in the neighborhood of around $16 a ton. France, $25 a ton. So wheat business at this time is being done by non-U.S. suppliers to a greater degree than us as a result of being cheaper priced. And almost the same thing going on with the corn market, where Argentina is being quoted at 65 under the DIS. And if there's any corn business out there, we've been seeing where our weekly sales haven't been all that strong. So business for corn and wheat is finding other suppliers, but that's still not generally the case for the bean market, as we seemingly are the only still shop in town for soy supplies. That's going to make it a little bit harder to ration as we continue to move forward and try and make those USDA numbers fit. We're going to get a NOPA crush number a little bit later on here this morning. With crushing margins being quite healthy, we should continue to see the crush stay in a positive mode, and that also will continue to make the rationing job a little bit harder for the soybeans if these crushing margins don't back off appreciatively, but once again, they're still quite healthy. Other than that, we have China continuing to, seemingly, if they're buying all these beans and having imports, margins coming back to them, the rationing job's going to be tough over there. They're still in the neighborhood of around $20 a bushel. And even with their large crop being projected to be 200 million bushels, or 200 million tons for corn, they're seemingly not seeing any break in their corn prices. They're still over $9 a bushel. So we are going to try and get a bounce. I guess it is a little disappointing seeing what the USDA came out with last week and us selling off the markets. Seems like we're doing more position evening more than anything else. But I guess it'll be something, if we were to work lower from here in a general way, I guess I don't see the farmer wanting to go and sell the market. And I think if we do go lower from here, you're going to have the user that's still seemingly going hand to mouth to support the market. So I think we're more of a pause effect in the marketplace right now, rather than to go and say the USDA report is over with and fundamentals are changing negative, and or the crop ratings are improving so much that the crop's been saved. So anyway, these are my opinions, not that of ADM or ADMIS. Thank you.